gold is climbing a wall of worry and no one's focusing on it.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for August 5th through August 12th, 2024, while supplies last. First, we feature 2024 1-ounce silver American Eagles at $5.50 over spot. Next, we have backdated 1-ounce silver Austrian Philharmonics at just $3.10 over spot. We also have Dealer's Choice Constitutional Silver half dollars at $2.50 over spot per ounce. Next, backdated 1-ounce gold American Buffalo are just $99 over spot. And finally, we have a limited quantity of 1-ounce silver full-color Trump Fight for America bars, just $6 over spot. They come 20 to a sheet, and so have a minimum order of 20 and are sold in multiples of 20. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Mario Innecco from the Innecco 64 YouTube channel. Mario, thank you so much for joining us today.
You're welcome, and thank you for having me on your channel.
Well, it's great to have you today. I wanted to discuss what happened in Japan, what happened in the U.S. stock market, and how the Fed might respond. So obviously last week we had the Nikkei fall more than 10%, I believe 12 or 13%, and it's rebounded significantly. But last Friday when this happened, you said that it's possible that Japan has pricked the everything bubble. So can you expand on the significance of what happened?
Yes, I guess we need to go back a few months. I think in May, the Bank of Japan raised rates from negative 0.1 to 0.1. And then last week, they raised it again by 0.15 to 0.25 positive. That was only the second time in like over 20 years that they've raised rates. And the markets didn't react very well on Friday. Last Friday, I think the Nikkei was down 2,000 points, which was the biggest drop since Black Friday in October of 1987. And then this Monday, or overnight from Sunday, the Nikkei dropped 13.5%, which was even bigger than the drop on Monday. And the pre-market futures indices, the Dow, NASDAQ, S&P, they were down massively on Monday before the open of the market. They did manage to kind of stabilize. And despite the fact that we finished down quite a bit on Monday, the markets seem to have calmed down for now. The deputy governor of the Bank of Japan, he's come out and said that they will only raise rates again if the market stabilized. But the problem is the markets were destabilized by their rate hikes. And I think it just goes to show how leveraged the whole Japanese financial system and is, and how it also affects the Western financial system, because for decades people have been borrowing in yen because it's very cheap. The Japanese yen is usually weakening, and they can borrow. They could until recently borrow for negative. Now it's positive. And that's what's happening. And I'm not convinced this Japanese yen carry trade crisis is over. I think we've just seen the tip of the iceberg. And there are problems, of course, all over the world in terms of economics. The U.S. economic data are getting weaker and weaker. We're seeing the yield curve, the 2s, 10s in the U.S. approach almost flat. And usually after it's been inverted, that curve, when it disinverts, it points to a recession in 3 to 6 months after that. So there's a lot of things going on. And say, apart maybe from silver, which has been a little bit volatile, gold has held really steady, and I spoke about that this morning, and we're talking on Friday, the 9th of August with Clive. Yeah, in the week where the markets were so choppy, we saw the VIX index explode as well. Gold has held like a rock that it is, right? A pet rock, as they say it.
Gold definitely has held up very strongly in the last few days, and that, barely even breaking that $2,400 level and now above it. But I did want to get kind of more into what we're seeing happening right now. Obviously, there's the weak yen, and also you have mentioned how the everything bubble is probably going to be popped, or the everything bubble is going to collapse probably because of problems in currencies. So why is it that currencies are going to be popping the everything bubble?
Well, the Japanese yen is one of the major currencies. I think it's after the euro, it's the most has the most weight in the dollar index. Prior to the euro, it used to probably be the third behind the Deutschmark, and the foreign exchange market. Many people don't realize is probably the biggest market um, in the world in terms of how much they trade every day. They trade trillions of it. And what happens, the current currencies are like at the base of the financial system. People borrow or they lend in the currencies, and then whoever gets the currency, they'll go and buy assets. Everything's leveraged with the derivatives. And as I said, it's for years, the Japanese yen has been steadily, especially since 2013 with Abenomics, because the yen bottomed at around, or the dollar bottomed, sorry, at 80 yen, I think in 2013. That was the level. And the yen has been dropping ever since. But recently, that drop accelerated, and the dollar got up to above 160, which is a 34-year high. And even though that is good for the carry trade, it's kind of bad for Japan, because if you lose control of the drop in the currency, it's a big problem for Japan, for savers, for pensioners, for everyone, and especially seeing that Japan needs to import a lot of raw materials because it processes them and then exports it. So what they've been trying to do is kind of stop the yen from dropping too quickly. But what happened is that it went the other way, and the yen rose too quickly, and the dollar dropped too quickly. By the beginning of this week, the dollar had dropped to 140. So they've created massive volatility in the yen. And the yen, as I've said many times in the last few years, I've covered the yen carry trade. It allows Western investors, Japanese investors, basically to borrow a lot of money for nothing and buy everything that yields more than zero. And that's why, in my opinion, that's been it's not been the only thing that's inflated the everything bubble, but it's one of the big pillars of it. And I think this pillar is ready to come crashing down. And there's still a few other pillars out there, of course, like Fed money printing and QE. They could still use that, or any other program that the Fed deems necessary to keep the bubble going. So that's why I think we could see, yeah, it's difficult to say how long it will take, but the everything bubble could, there's two ways I think that it could unravel. One is that everything collapses and you get 1929 style deflationary depression. Everyone goes bankrupt, almost everyone, unless you're not in debt. Or you could see the bubble still keep blowing, but the flip side will be that the currencies are going to be worthless. So either way, it's not good. I don't think there's a middle ground, and we've seen that just by trying to raise rates in a tiny amount, the Bank of Japan has created a lot of problems. And very few people realize that the Bank of Japan is still doing like massive amounts of QE. They're doing like, if you equated the Japanese economy to the American economy, it would mean that the Fed would still be doing like $250 billion of QE a month. That's how much Japan's still pumping into the system. That's how things are, and that's why Elijah, I'm still holding on to my gold and silver. I'm still trying to stack as much as possible, even though it's not easy, of course, because you need to be able to put some fiat currency aside after all your expenses at the end of the month. Yeah, and yeah, I don't think they're going to be able to fix things.
Now, how does this translate into how it could also affect the US dollar? Do you think the everything bubble will also be affected by a decline in the US dollar?
Yeah, I think the decline in the dollar is going to be more versus gold, just like every other currency. But as we've seen recently, the dollar could collapse as well against the yen because we've seen it go from 160 to 140 in a matter of weeks. So you could have the dollar go down to 100 versus the yen, but against the other currencies, it might stay pretty stable. But I think the currency that's really gonna gain is gonna be gold. That's the way I see it, because if the everything bubble is really pricked and people start trying to get out of the cinema, so to speak, they're going to be selling everything. And I saw a little chart the other day, and it compared stock markets in 1900, I think, or something like that, to now, and the market caps. And back then, the US had a 14% of the world's market cap, I think, or maybe even less, but now it's like almost 50%. So I think, yeah, the dollar would get hurt because foreigners would be selling their US stocks, selling their dollars to bring their money home as well.
There has been talk quite a bit about a rate cut, an emergency rate cut by the Fed in response to all of this. Do you think the Fed can actually stabilize the markets in any sense or save the system momentarily here?
Well, I think if you look back, I think it was 08, 02, um, and even maybe 2020, when the Fed starts cutting, the markets actually keep going down. It's only after the crisis really culminates, like it did in with the Lehman collapse, that things start stabilizing. So yeah, the Fed might do something prior to September, I think September 18th, the second day of their meeting. But like I said in one of my recent videos, the working group on financial markets was created as a consequence of the 87 crash. It was created in 1988, and it put together the SEC, the CFTC, the Fed, and the Treasury to oversee markets. And I think on Monday they were probably very busy on Zoom talking to each other before the markets opened. And I think uh, they helped stabilize a little bit the markets when they opened the regular hour, and that's why I think things picked up again. But the this PPT or working group, they can only do so much because the market is much bigger than they are. And the market's resources are much bigger. So eventually, I don't think they can kind of calm things down, but eventually, unless the powers that be want everything to implode and collapse completely, like in 1929 to 1932, they will have to come in and throw the kitchen sink at it again. And by that I mean cut rates massively, the Fed funds rate, and announce another huge round of QE.
It seems like every round of QE is bigger than the last. I mean, if you just look at the base money supply over the last 15 years. It's just insane what has happened. I did want to ask you about the banking sector as well. We just interviewed Michael Oliver, and he was saying how the banking sector is going to, the bank stocks are going to probably fall, and that's when the Fed is going to step in. Amid all this crisis in the economy and the financial system, where do you see the banking sector heading from here?
I agree with that, Mr. Oliver's like thinking. And right now, we think the banking sector is fine because they saved the day back in March of 2023. Everything's quiet now, but he's right. It could flare up again, and it will be even worse because people have probably gotten complacent, investors and people with money in banks, because they think, well, the Fed and the Treasury bailed everything out last year. So yeah, it feels a little bit like the subprime mortgage crisis. I think a lot of the subprime lenders started going bust in the spring of '07, and it wasn't until, well, the fall of 2008, when Lehman collapsed, that things really started, that the crisis culminated. So yeah, it could very well be that. If the Fed sees the banking sector under pressure, that they will save it, because that's what their real mandate is. The Fed's mandate, what they tell the public to maintain full employment and stable prices. That's just for politics. But the real purpose of the Federal Reserve is to allow banks to privatize their profits, but when they lose and the system's under pressure, they will socialize the losses, and by that I mean they will inflate the currency out of thin air, and that will hurt the public, or they'll bring in the Treasury to bail out the banks. Unfortunately, yeah. So I think Michael Oliver's take is spot on. We just need to keep an eye on that banking index he talked about.
And when it comes to precious metals, you've mentioned how gold has held up quite well during this chaos in the stock market. Now, it seems like gold is acting differently, right? Because it is holding up so well. Often in the past, we've seen somewhat of a correlation between the stock market and gold when we see a big crash. But right now, it seems like gold's definitely acting differently.
That's right. And each year when the banking crisis erupted, gold and silver did really well. And people were rushing to gold because they're thinking, my deposits, well, actually, it's not even your money in the bank; it's your unsecured loans to the banks are in trouble. So let me get out of it and cash in and get some real specie gold and silver, and GLD and ETFs won't do. So I think the other factor that is helping gold prices, the fact that a lot of foreign sovereign nations and even people like in China and India, they're still accumulating a lot of gold. I know China officially has stopped buying gold since May, but I think they're doing it through the back door because they don't want the price to take off too quickly, because they still have a lot of foreign reserves in fiat currencies, especially in dollars.
Now, I know silver has been hit quite a lot since the beginning of this stock market pullback. Do you anticipate silver to recover pretty soon from that? And why do you think silver has kind of gone along with the stock market here?
Yeah, because silver it is partly monetary, but it's also partly industrial. So it always gets kind of affected more than gold when we see a stock market drop like this. But I still think we're up on the year, and I think we're holding. If you look at the bigger picture, we're still holding some key technical levels. And yeah, silver is always more volatile, and Yeah, and if you hold both gold and silver, yes, your silver is kind of not paying off right now, but your gold is. So it's okay, I think, and I think eventually silver will. And I've been saying this, of course, for the last few years, but usually in the massive precious metals bull market, silver does outperform. And if you look at gold, I mean, the chart looks really explosive, especially like a quarterly chart going back 30 years. And it's amazing that so few people are looking at that, which is a good thing. There's no like the sentiment is kind of very neutral. There's no hysteria yet, like there is with other assets like cryptos or even Nvidia. Gold is like climbing like a wall of worry, and no one's focusing on it.
If our viewers are interested in learning more, did you have any last thoughts for our viewers, and where can our viewers find you online?
Last thoughts. Yeah, try to ignore what CNBC, Bloomberg, or all the mainstream financial uh, news tell you about things. Focus on the fundamentals and the fact that the debt is like not going to come under control, despite no matter who becomes president on January 20th. And yeah, focus on stacking, not to make money, but to protect your savings. And you can find me on YouTube at Innecco 64. I'm on X as well at Innecco 1964. Even though it's getting more and more dangerous for me there, being in the UK, I need to really watch what I post there, because I could get a knock on the door. And that's another sign that things are really going south, and you need some physical gold and silver.
All right. Well, Mario, we really appreciate your time today and all the work that you do. We'll put a link in the description of this video to your YouTube channel. Yeah, thank you so much for your time, and God bless.
You're welcome.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin weekly specials for August 5th through August 12th, 2024, while supplies last. First, we feature 2024 1-ounce silver American Eagles at $5.50 over spot. Next, we have backdated 1-ounce silver Austrian Philharmonics at just $3.10 over spot. We also have Dealer's Choice Constitutional Silver half dollars at $2.50 over spot per ounce. Next, backdated 1-ounce gold American Buffalo are just $99 over spot. And finally, we have a limited quantity of 1-ounce silver full-color Trump Fight for America bars, just $6 over spot. They come 20 a sheet, and so have a minimum order of 20 and are sold in multiples of 20. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.